Good morning, Soup. My name is Carrie. Happy Wednesday. Today is officially my first day of being self-employed. I'm a resident Georgia agent in all lines and licensed in life and health in most. I have my CPCU, my ALMI, and my ACS, which are industry designations that gave me a really solid education on insurance. I'm working on getting comfortable on camera, so I'm making you guys a video today on important riders that should be included standard on your life insurance policies and quotes. This video is not really for life insurance agents. Y'all already know these things. This is for P&C agents who will sell life insurance a little bit. I know when I was in captive positions, I was expected to sell one or two a month, and I pretty much only sold term. That's all I sold. Of course, the following is just my opinion, but the riders I'm discussing today, I just feel should be added to the original quote and included in the price for any term policy. You're going to discuss the coverages, but don't ask if they want it. Just present it as part of the quote. They'll tell you if they don't want it. I don't really phrase it as optional. First is the disability waiver premium. This is a rider that means if the policy owner becomes disabled, the premiums are paid by the company. First and foremost, things super duper cheap. I just checked my own policy. It cost me $14 a year for my $250,000 term. It should be included for two reasons. First, it's the right thing to do by the client. The statistic where I live in Georgia is 20% of the population will become disabled during their lifetime. Taking a bill off your client's plate when they're on a reduced income makes you a hero. Second, it's just a persistency solver. Life insurance is one of the first expenses people cut when they're going through a financial hardship, and this just removes that barrier, and the policy will never lapse if the company pays it. Next is accidental death and dismemberment. This is just something that should be added to term policies. It doubles the face amount traditionally if the person passes due to an accidental death, also called double indemnity. I checked my whole life that I carry double indemnity on. I pay $3 a month for that. I don't know if you know, but the leading cause of death in people between the ages of 18 and 44 is unintentional injury. So that's like car accidents, things like that. You need to protect your client the way they're most likely to pass away when they're young. Between the ages of 18 and 34, the top three causes of death are not natural. They are unintentional injury, suicide, which is not covered by an AD&D, and homicide. Think about it. You sell term policies to young puppies, and you need to protect them from the way they're most likely to pass away, and this gives them a ton more coverage for a really low price. Third is the accelerated death benefit rider. This is for terminally ill people. It allows them to access a portion of their death benefit, traditionally 50%, before they pass away. They need to be given a prognosis of generally 1 year or less, but if I was given 1 year today, I would have enough access. I would be able to access enough money to take care of my family, the things I need to do before I passed. That is really being a good agent. You're being there through it and at the end. The last is the most important. It's also the most expensive. That's the guaranteed purchase option or guaranteed insurability. The two are fairly interchangeable terms. They mean your client can buy insurance without going through medical underwriting at certain periods of time. I personally don't have one, and I really wish I did. I always assumed I would want the commission of buying another policy from myself. But then I got diagnosed with a chronic condition. I'm no longer eligible for regular life insurance, just uninsurable. But on the other side of the coin is my friend Sarah. Sarah was the world's healthiest person. I only threw this on her policy because she got such good rates. She got preferred rates. They were amazing. She runs 10 miles a day, eats really gross, healthy food, was like a size 2. And then she became type 1 diabetic, so there was no more preferred rates for Sarah, or really any rates at all. Buying insurance as a type 1 diabetic is just terrible. But she has that guaranteed purchase option. So she can buy more insurance, and diabetes will not be part of the equation 4 times in her lifetime. So that's what I have for you guys today. I would love to hear what you guys would want to learn about for insurance. Again, I'm going independent. Today is day 1. So I am licensed in at least one line in every state except Florida. So if I can be a resource, you guys please reach out. And I hope you have a great rest of your Wednesday.